Good afternoon, all. On behalf of Antique Stock Broking, we welcome you all to Q4 FY24 post-earnings conference calls of Canara Bank. From the management team, we have Shri K. Satyanarayan Raju, MD and CEO, sir, Shri Devashish Mukherjee, Executive Director, Shri Ashok Chandra, Executive Director, Shri Hardeep Singh Ahluwalia, Executive Director, and Shri Bhavendra Kumar, Executive Director. Without further ado, I hand over the call to MD sir for his opening remarks, post which we can open the floor for any questions. Thank you, sir, and over to you.
Good evening to all of you, sir. So I am presenting here before that some few highlights of that the just concluded fourth quarter of the financial year 23-24. So our global business has touched all-time high of 22.73 lakh crore with a year-on-year growth rate of 11.31%. Our global advances has grown at 11.34%, stood at 9.61 lakh crore. Our global deposits have grown at 11.29%, year-on-year growth rate of that's 11.29% and stood at 13.12%. The deposits in the fourth quarter has grown considerably, as we shared with you during that announcement of the third quarter results, that we focus this quarter more on that liability side to see that our incremental credit growth in the financial incremental CD ratio in the current financial year will be well within the 100%, which we could achieve it. That has helped us in controlling our cost of deposit as well as in the improvement of our CASA percentage. Our net profit stood at 3,757, all-time high in the history of the bank, at a year-on-year growth rate of 18.33%. With this, the board has permitted us to propose. The board has proposed a dividend of 161% of paid-up capital, as against last year, what we have paid the dividend of 120%. So our net interest income has increased 11.18% year-on-year and stood at 9,580. And the return on asset has further improved to 1.01% and year-on-year improvement is 20 basis points. Our PCR is improved to 89.10% with year-on-year improvement of 179 basis points. Our credit cost is again maintained the below 1%, that is stood at 0.96% with an improvement of year-on-year 21 basis points. The gross NPA has stood at 4.23%. Year-on-year, a decline of 112 basis points. Our net NPA stood at 1.27%, year-on-year decline of 46 basis points. This, whatever the 11.34% of our advances what we announced is led by our RAM sector, grown at 13.52% and stood at 5,41,489 crore out of 9,60,000 crores. And this led by retail credit at 11.68%. Agriculture and allied activities are grown at 18.69%, and the housing loan grown at 10.81%, and vehicle loan grown at 14.03%. Our year-on-year earning per share has improved 37.26%, stood at 80.23, compared to last year earning per share is at 58 rupees. So now that net interest margin last year total cumulative last entire financial year, previous financial year, NIM was 2.95, as against that current year NIM cumulative is at 3.05% with an incremental improvement of 10 basis points, which is also as one of the remarkable performance. I can say that under the present hardship conditions for the banking industry at a high interest rate regime of the liabilities. Even that liabilities at a rate of interest has steeply increased. We could manage by managing our credit portfolio. That's the reason we could manage in the last fourth quarter. Our quarter-on-quarter, the incremental growth in the yield on advances were 11 basis points versus the increase in the incremental interest expenses is 8 basis points. This we could achieve it. That's why we could achieve 3.0%. But the fourth quarter itself, our NIM was 3.07%. This we could achieve it where we are already sharing earlier also 2-3 quarters back that we have some 60 to 70,000 crores corporate exposure at much cheaper rate, which we lent 2 years back because to invest our surplus money, which we want to gradually reduce that exposure and to see that the stress on our margins to avoid that. That we are successful in the current quarter also. We reduced our such exposure to some extent, that around 10 to 13,000 crores. That has helped us in improving our NIMs and the yield on advances. And these are all the few ratios we are sharing. I think now it is open for you, if at all, if you want to ask, because this presentation has been already shared with all of the investors as well as on online also, our website also it has been displayed. Now it's open for the forum is open for all the analysts. Whatever the clarifications or the queries you want to raise, and myself along with me, all my 4 executive directors are with you now. It's now open for the forum for discussions, sir.
Yeah. So the first question we have from the line of Maruk.
For credit growth.
Hello, sir. Hi. Good afternoon, sir.
Good afternoon, madam.
Yes, sir. So, sir, I have a couple of questions. My first question is on your guidance that relative to what you have achieved in FY24 on credit growth, your credit growth guidance is slightly softer for next year, and everyone is quite bullish for the next few years, right, in terms of loan growth in retail and corporate. And then even on margins, your guidance of 290, that's like 17 basis points lower than the fourth quarter exit rate, right? So these are sub-questions on the guidance portion. And then I have a question on the new RBI draft circular. First, your comments. And then companies like L&T Finance, REC have actually quantified the impact from the draft circular based on their initial estimates. So if you could give any feedback of the annual calculation. Yes, sir.
Yes, madam. Let me clarify, madam, regarding that our guidance in that advances growth. Generally, whenever we give guidance, we give conservatively only, but we want to outperform what we have given to that guidelines. Earlier also we have given 10%. You see that we have grown 11.34% even after rejigging that pricing that corporate portfolio. And this year also what we have given 10% is a minimum growth, and we are sure that we will grow around 12% in the current financial year. But the guidelines always, whenever it's a practice of this bank 3 years, that we give little conservatively on the guidelines, but when it comes for the performance, we are outperforming in every quarter on quarter beyond that. Even NIM also, last time you see that our NIM is 2.95%, the annual NIM. But the current year, under such difficult conditions also, we are the only banker we could show the improvement in the NIM with 10 basis points. Our NIM has reached to the annual NIM is 3.05. Of course, fourth quarter it was 3.07. The 2.9 is only a guidelines given to you. It's a minimum. But we are sure that we will maintain at 2.95 to 3%. This is subject to presuming that the present tightness in the liquidity will continue throughout the year. If at all that liquidity is eases once the elections are over, naturally that will impact in our cost of deposit, and automatically it will impact on improvement in the NIM. This is a basic minimum based on the existing circumstances we have given it, madam. But we are definitely confident that we can perform. What we are doing is outperform in the last several quarters. The same it will continue in the next quarters also. We are not looking at any low track traction in the credit, either in the RAM side or in the corporate side. Only that lower credit growth, what we have shown is earlier, because the 2 years back we invested 60 to 70,000 crores. When we have a surplus in our system, we invested at a very low price to some big organizations, which now presently is not feasible to continue at that price. So hence slowly whenever it is coming for the renewal, we are reducing our exposures to that borrowers. That is the reason it is looking at that it's a little lower growth rate in the advances side, but it's for all practical purposes, for the new sanctions and all, it is a compared to last year. This year new sanctions are much more than what the last year sanctions. So growth will be there, demand is there, but only thing, because we are rejigging our balance sheet in the low pricing, we are making it to reasonable pricing, because to maintain that margins, that it looks that it is a little lower side on the credit growth. But now again you are telling about that your second question is on the what the RBI draft guidelines. Madam, RBI draft guidelines, it is still at a premature stage. It is only a 2-3 days back. We tried to assess it, but we have several doubts on that, the guidelines, because the guidelines never spoke about what is the floor limit for that project. We have to calculate every small project also, whether it is 1 crore or 10 crore or 100 crore or 500 crore. That clarity is not there. Unless otherwise we get those clarities from them, so it will be difficult to assess what is our impact on that. But whatever the impact it is, even whatever the guidelines, if as it is implemented also, we are very much well prepared, because you know that the last time when the risk weightage on the NBFC exposure has been increased or improved by the regulator, we are the first banker, partly we have shared with our borrowers. This also it will continue whenever there is an improvement in these things. Suppose provisioning norms are increased, we recalculate our RAROC. Naturally, part of that we share with our borrowers, and the remaining things we will absorb it. I don't see too much pressure on our bottom line or even on the capital side, madam.
Hello, thank you, sir. Just what is your marginal cost of deposits, incremental cost of deposits?
Madam, incremental deposit, जो term deposits है, that is on an average, it is a 6.5 to 6.75 is there, madam. But because the CASA is there and the previous जो outstanding deposits at a lower rate, on average, the cost of deposit last quarter, it is increased from 5.4 to 5.50. Now it is a cost of deposit as on date, it is 5.50. But it's the last quarter, you see that only 8 basis points has increased there. But yield on advances has increased from 8.6 to 8.71. That means 11 basis points has increased. That's why we are able to show the 3.07 NIM as against our projection of 3.05.
Got it, sir. Got it. Okay, sir. Thank you. Thanks a lot.
Thank you, madam.
Thank you. The next question we have from Mona Khetan. Request you to unmute yourself.
Hello.
Hello.
Yeah, hi sir, good evening.
Hi, Mona madam.
Hi, just a few clarifications. So firstly, when I look at your car balances, it was up 30%, over 30% this quarter. So what exactly has driven this higher?
No, car percentage is floating funds, madam. Whenever it comes for the floating funds, you get that benefit. But we have taken some new schemes also in the car. Actually 2 new schemes we introduced 6 months back. Those new schemes also have started earning that, because we made it free of charge for every transaction. In that we have given several customer friendly, and we also introduced last year API banking for corporates, and we also introduced a mobile app for the corporates. These are all some of our initiatives, both product side and the future side and the platform side, is helped us in giving that boost in that current account. But 1 or 2 institutional deposits, institutional accounts where we could canvass the state governments or the central government accounts, there also some float funds have come. That is the reason. But we have seen the steady growth in the savings individuals. Savings individuals for year-on-year basis, we have grown more than 17,000 crores. that has actually given a confidence that in the current year we could achieve it, we could easily achieve that 33% projected, whatever we have projected. If you look at that, the fourth quarter of our CASA has improved from 31.65 to 32.21 or something 24. So that itself is around 63 basis points. It is increased in the fourth quarter because the entire machinery, entire bank, we have focused on CASA by introducing new products, new platforms, new features, and new initiatives to reach the new customers as well as the reconnecting with the existing customers. And this current year also, in the first working day, we have launched one Canara Angel that's targeting for the women customers, and that has widely accepted by the public, and already in the 1 month we got more than 200 crores deposit mobilization only in the new accounts, not from the existing accounts. This tempo of introducing new products and the initiatives, technology related initiatives, making the customer journeys more comfortable to them will continue, madam, so that our focus, we know that unless otherwise we work hard on our CASA, it will have impact on our NIMs. That's why we are working more and more on CASA products and the CASA mobilization, madam.
Got it. And secondly, on the operating expenses front, so what led to the sharp rise in other OPEX, and what sort of pension provisions have been made this quarter? And given that there was retrospective impact of wage hike this year, what sort of normalized employee expense we can expect in FY25?
The staff cost, that as per the bipartite settlement, that as last time also we have provided 750 crores. During that time, I shared with you that another 150 to 200 crores towards the actuaries or the pension benefits we have to provide it. But when it comes for the actual calculation, it has come to the 350 crores. That 350 crores, entire 350 crores, in addition to that, whatever the incremental salary we have to pay, entire amount we have provided in this only. The second one is, that is the reason the staff cost has shown that, but ultimately our staff cost will stabilize around 4,100, though it is a current 4,458, it is showing that. But next quarter onwards, our quarterly expenditure, what we are looking at is 4,000 to 4,100. So to that extent, the cushion is there in our books. The second one is other operating expenses also, whatever the one-time requirement is there, that around 200 crores, we have booked that expenditure also. And since when we are investing on the IT, naturally the IT expenses also is slowly operating expenses are increasing that. But we are sure that we will maintain around 47% the cost, whatever we could achieve that the cost to income ratio, we will try to maintain that or little lower side at the 47%.
Got it. And just finally, what's the outstanding standard provisions on our books, and what is the PCR we hold against the restructured book?
Madam, restructured portfolio overseas, when it comes for the RF1, RF2 and all, so total our restructure has made during that time it was 24,000 crores. But now as on date it is outstanding is only 17,000 crores. Out of that already 12,000 crores is standard asset and 4,800 crores slipped to NPA.
Okay. And what sort of provisions do we hold against this 12,000 crore of standard assets?
So whatever the stipulated regulatory stipulation is, that we are maintaining it well above than that, madam.
So say around 10% or thereabouts.
No, the regulatory requirement, whatever it is there, that we are providing it.
Okay. And other than the general provisions of 40 bits, we may not be holding any other excess standard provisions. Is that a fair understanding?
No, madam. Wherever it is required, actually, even if it is not required in one big account, the last year it is slipped to NPA. There, not in anticipation of future ready, we have provided some 300 crores additional provision, which is not required as per regulatory, but we have provided the 300 crores.
Okay, but that was a slipped account.
Total actually additional provisioning, what we have done is 1,800 crores, madam.
This is 1,800 crore is the standard asset provisioning.
No, madam. Total regulatory requirement, beyond that 1,800 crores what we have provided. Okay. That is for only future ready balance sheet.
Okay. And this excludes the restructured book, the minimum requirements of restructured book as well.
See,
Okay.
everything, whatever regulatory requirement, we are meeting that regulatory requirement. Beyond that also, we are over provisioning, we are making it. That is, the over provisioning is around 1800 crores in the form of whether it is in the standard asset or restructured asset or NP asset.
Got it, sir. And if I could just squeeze in one last question. So, on the recoveries front, we have seen when it comes to recovery from written off accounts, we have seen very strong numbers at about 5,900 crore this year, if I take the full year. So, and this constitutes a very large part of your overall profitability at around 40%. So what would be the guidance here on what sort of, because I mean the pool may be coming down, etc. So what would be the guidance on this front?
Madam,
Thank
we
you.
have still written off accounts, technically written off accounts portfolio is there with us around 68,000 to 72,000 range. Still there is a lot of scope to recover out of that. And every year we expect that 4 to 5,000 crores we get from that bunch. And the fresh return off also is keep on happening in that every quarter. And when you return off, write off in the press release, there is every possibility that in that also there is a possibility to recover the amounts. So this is an ongoing, it is not a one-time, madam. Every year we look at that 4 to 5,000 crores we can recover from the return of accounts. And the main where we can share it with you is our quality of the assets is main important. Look at that the 1 year back we are told that we are shared with the, all of you that our recoveries and upgradation will be better than the slippages. That is the standard we have taken, and the entire top management along with that staff members we are working on that. Continuously every quarter we are able to maintain that. In the current quarter also if you see that our slippages are from existing, it is a 3,082. The new fresh slippages, even existing page you add on is 300. If you add total, it is a 3,400 slippages is there. As against that, the upgradations are 520 crores and cash recovery is 3,161. Total it is a 3,681 accounts. 3,681 against the slippages are only 3,400. So we are continuing in that. And even when we are working hard on even existing SMA 0, 1, 2, there also. That gives that figures more comfortable for you that you just look at that 1 year back, our percentage of the SMA 0, 1, 2 is at 0.76%. In between though it has gone to the 0.80, now it has come down to the 0.69. So we are working very hard on that number of accounts. If you see that both accounts and amounts, both at 0 level and 1 level and 2 level, we are working hard to control there itself. So that is helping us in maintaining our credit cost below the 1% and less pressure on our NIMs.
Thank you. We move to the next question from Rakesh Kumar. Request you to please unmute yourself.
Yeah, hi. Thanks a lot. Sir, couple of questions I have. Firstly, we have a total gross NPA and written off pool of 11.6% of total loan book. So what is the, total unrealized interest income that we have on the book?
Pardon? Unrecovered.
Unrecovered, unrealized interest income on the gross NPA and the technical.
So that is very difficult to calculate and tell. That's our CFO will share it to you, mail for entire exactly amount you have to calculate. But to book balance, I can tell you that. So almost 1,10,000 to 1,20,000 it is available, including that gross NPA and the return of book balance. But the return of unapplied or waiver interest. So if you take it that documented rate, it will be multifold. So, but there is it's very limited possibility that you can earn out of that some amount. That's why generally we don't maintain that figures. It is individual account wise it will be there. But when the negotiations happens, we also try to get not only the book balance, if at all any part of that unrealized interest to be recovered, we keep recovering that. But that is an multifold which will be there. So when correct. I showed it is 110 to 120, that will be definitely more than 100% of that amount.
So for this quarter, sir, the interest income that we have accrued, what would be that number, sir, from from NPA recovery and TWO recovery?
That's what, sir. This recovery also, this time also, again we are targeting around TWO, the book balance and all. It is approximately we are expecting around 1500 to 1600 we can recover. But these are all ultimately in a year we book around that 4 to 5,000 crores from technical written off. Some one quarter it may come down, one quarter it may go up based on that materialization of our negotiations. In the anxiety of achieving that things, sometimes we will not compromise on our, when we can recover higher amount, we will try to recover the higher amount only, even if it's 1 month delayed. That's why exactly telling in the particular quarter how much it is very difficult. But in overall year, we definitely recover in the technical return of around 4 to 5,000 crores, which we are already reflected in the last 1 or 2 years financial balance sheets.
Correct, sir. Correct, sir. No, sir, interest income part, sir. Interest income part that we have accrued this quarter, sir. How much that would that number would be?
See, again, interest income part also, it is based on your growth in the advances, average growth in the advances. That is an interest income, no? Or interest on non-performing assets you are expecting.
Correct. And sir,
you are expecting from me interest on non-performing assets.
Yes, sir. Non-performing asset and the technically written off loan that we have recovered this quarter.
More or less, that will be in every quarter. Almost it is in the same lines. It will be there, but exact amount telling that that's budgeting will not be there for that. Whatever the best we can do, we will try to recover as much as possible.
Great, sir. Sir, on the other OPEX, I would like to come to that number again. That number has gone up by around 600 odd crore this quarter. So what is the incremental number here in that other OPEX, sir? If we can,
see that particular, see what will happen when that particular quarter it is in the technical written off OPEX. It's the OPEX staff cost. You see that the first one is. That's what actually the staff cost. One thing is operating expenses pay. The staff cost, because of the bipartite settlement, we have to provide 17%, and we have completed that entire payment of arrears from November 2022 to now. And in addition to that, whatever it is required for towards pension and the gratuity, that based on the recommendations given by the actuaries. And initially we expected that it may be around 150 to 200 crore balance, but in actuals it has come 350 crores. That entire 350 crores also we have provided below the line. So that's why your staff cost is reflecting that 4,458. But on an average, every month, next quarter onwards, this staff cost will be stabilized around 4,000 to 4,100. There is a question of 350 crores here in the operating expenses. The second other operating expenses is in the depreciation. One is there, and one time some expenditure in the IT related also around 150 to 200 crores we absorbed this time only. So those things are there. That's why that it is reflecting that little more in the operating expenses, but otherwise, whatever our control in the operating expenses will continue, and it will stabilize even other operating expenses around 2,600. So, over the 600 staff cost, there is a 300 benefit will be there. In the down the level also, there will be some 300 crores cushion will be there when the coming quarters are coming. So, that will be the 250 to 300 crores benefit will be there. So that will be the comfort for the next quarters, few quarters, whatever it is there.
So just one last question, sir. Our non-retail term deposit.
We would like you to please join back in the queue.
Sure.
Thank you, Rakesh. Next question is from the line of Jay Mundra. Jay, if you can unmute yourself and go ahead.
Hi, good evening, sir, and thanks for the opportunity.
Good evening,
sir.
Jay.
In your opening remarks, you mentioned that you are still studying the RBI new circular on project under implementation. But out of your infra book, right, you would have an idea as to how much of the loans are under DCCO as of now, maybe within the infra, book of 1,29,000 crores.
See, there are several conditions are there in that. It's not the guidelines is only. So project under implementation is there. Project completed, but the balance has not come down below 20% is there. Balance projects are implemented, the 20% has come down that is also there. And we don't know to what is the floor price we have to take for project, whether it's a project cost we have to take or the loan sanctioned has to be taken. So many doubts are there. These doubts we are seeking the clarification from the regulator. Exact amounts and tentative amounts we can achieve it. Otherwise, now you have to, if in the absence of that, tomorrow you may sanction one loan for MSME for 25 lakhs. That 25 lakhs is a project implementation also you have to provide. We don't know that exactly, no. So these clarifications, unless otherwise we get the clarifications, it's too early to comment on that. And but one thing I can give you a confidence that whatever the guidelines given to the RBI, we are well prepared to face that. That much confidence I can give to you, because partly whenever there is an impact on burden either in the bottom line or in the capital side, the calculations our risk department will calculate what is impact on that, and that calculations partly we observe and partly we request our borrowers to observe it, and we are successful in convincing our borrowers even in the recently last time when the risk weightage on NBFCs have increased. That is the reason we could maintain our NIM at 3.07, and we have shown a much improvement in the yield on advances in the fourth quarter. The same thing will continue when you have a good relation with your borrowers, and we can easily convince them to share the part of that. Even in existing borrowers also, we can request our borrowers to share that part of that burden. So I don't see too much panicness in that. And you see that the last year our net profit is 10,600 crores. But this time our net profit is 14,554 crores. Don't you see that there is a 37% increment for us? So we have ample cushion in our balance sheets. We are ready to face whatever it is there, the stringent guidelines. If it comes for the betterment of the balance sheet, we are in line with that regulator.
Understood, sir. Okay, sir, and on April 1st, there was a new RBI regulation on reclassification of investment portfolio. You must have redrawn the balance sheet as on April 1st. Was there any accretion to CET1 or AFS reserve or general reserve out of that exercise? And if you can quantify that.
I request my executive director who is overseeing that treasury, Mr. Sri Mukherjee sir, he will share his views on that.
You see, on implementation of the new accounting guidelines from 1st of April, it has added about 1,400 crores to our reserves. So that is a positive point which has happened by implementation of this. Secondly, our HTM portfolio, which is quite high, more than 80%, so that is also giving us ample scope for future, profitability, because the yields are coming down. And even in the last financial year, let me tell you that our portfolio yield has increased from 6.69% to 6.91%. For the total investment portfolio. So our treasury, our investment portfolio is doing satisfactorily, I can say.
Very point well taken, sir. 1,400 crores is a decent amount. It's just that it is the combination of both AFS reserves and general reserve, right? I mean, or is it only the
Right.
No, sir, just wanted to check, sir, is this the revaluation of both HTM as well as AFS, or only the AFS proportion?
No, HTM and AFS.
Okay, sure. And lastly, sir, if you can give the breakup of slippages during the quarter and the loan breakup by benchmark.
Which one?
What is that, sir?
On slippages breakup and breakup of loans.
Slippage breakup.
Yeah.
It's around 3,400 now, sir. Actually, out of that is 1,000 crores, 1,080 is agriculture, 1,200 crores is MSME, 400 crores is retail, and 400 crores from mid corporate it is there, sir.
And breakup of loan books, sir, by benchmark, by EBLR, MCLR, fixed rate.
So that's the MCLR book is around 51 point odd, that is approximately 52%, sir. Our RLR linked is 38%. The remaining 10% is staff loans and loans against deposit and all those specific schemes, sir.
All right. Sir, if you permit, I can ask one more question.
Sir?
Jay, we'll request you to please join back in the queue.
Sure, no problem. Thank you very much, sir. All the best.
The next question is from the line of Ashok Ajmera. Request you to please unmute yourself and go ahead.
Thanks for giving me the opportunity, though I am waiting from the first question itself. Anyway, sir, yes, definitely, sir, the profitability of the bank has improved, and it is one of the best quarter as far as the net profit is concerned. Having said that, sir, I have got again a question on our credit growth. Sir, if you look at this current quarter, the last quarter, the credit growth is, net credit growth is only 6,717 crore in the domestic book, which is just 0.75%. So overall, you said a target of 10% and you achieved 11%. But going forward, how are we going to, if in a quarter the credit growth, and that is also in the March quarter itself, if it is only 0.75%, so how can we expect the credit to growth to come in the coming quarter? So does it mean that a big chunk of loan has been repaid and a fresh loan are? Yeah. Yes, sir.
Let me explain to you, sir. I was sharing with you for last 4 quarters that we have 2 years back invested 60 to 70,000 crores in AAA rated borrowers at much cheaper rate. Because during that time that decision was the good, because we have surplus 60-70,000 crores in our system, we deployed that. But now that deployment became a costly for us because that borrowers are not inclined to increase their rate of interest, and at that rate maintaining that 70,000 to manage our top line will be difficult, and it will be having a stress on our margins. So as a calculative business decision, the bank has taken a decision to gradually reduce your exposure from these 7-8 borrowers from this 70,000 to acceptable level of 25 to 30,000 crores. That in overstretch we cannot reduce it. Whenever it comes for the due renewal for those things we are reducing 50% or 60% or 30% depending on the price what we are getting from that borrowers, and we are renewing it is partly. So the remaining amount we are accepting as a payment from them, and that amount we are investing in that. But the credit growth, there is no question of sluggishness. So I already shared with you in the last quarter itself, we are almost 14 to 15,000 crores. We have reduced that limits from existing 3 AAA rated or whatever it is, because the rate of interest is much below than the market rates. So that's why that is not reflecting in your Q on Q basis the incremental growth. If that is the case, that would have been impacted our RAM growth. You look at that, our RAM growth is more than 2%. Then it is not that the credit growth is not there. So only because of the corporate growth, we have taken that decision and to rejig our portfolio without impacting our margins. And where this 60,000, 70,000, the burden is there, that slowly we want to reduce that burden. This is the only that. And one more green patch I will tell you too, that maybe this is the first of its kind. From April this month, 30th month, the March 31st to April 30th, we are positive by 9,000 crores in the balance sheet.
Oh,
and that means in advances itself, we are positive by 3,000 to 4,000 crores. And that, don't you think that it will give us a benefit in the interest income?
Yeah, definitely, sir.
So we don't want to be in the market when the market is too busy and working for the top line. Our policy is very clear, sir. We don't want to grow at the top line at the cost of bottom line. We know when everybody is relaxed, we want to do that our job. That job we are doing in the April itself. And April, our balance sheet is so comfortable, and the first time in the history of our bank as well as in all the banks. We are 9,000 crores more than our domestic business of March 31st.
Yes, sir. Sir, my second
and majority of this incremental growth has come from either in the savings bank or in the advances. Nothing else.
That's great, sir. Sir, you said that the additional provision over and above the IRAC norms is 1,800 crores. Sir,
yes,
out
sir.
of that one major account, which was slipped this year,
yes,
how
sir.
much out of that 1,800 crore is of that particular account?
So approximately 300 crores is there, sir.
So overall 300 because 300 you made this year.
No, overall
but
nahi hai, sir. Additional we have provided 300.
Out of this 1800 crore which we have the floating, I mean the extra provision.
Sir,
That
300
one account
extra provision. 300
Okay.
extra provision we have made towards that account.
That account. Okay, sir. Point well taken. Sir, I will come on treasury. We have given a very good handsome profit on. Yes, sir.
No, let him ask, sir. Let him ask. Ashok ji is let him ask, sir.
Okay.
I have been waiting for a long time. People have asked five,
Don't worry,
six,
sir.
six
Ask,
questions.
sir. Ask,
I mean,
sir. Because you better to you have to
moderator
take
also
the
should
clarity
understand.
from. If any apprehensions are there, it is better to take the
No,
clarity.
no apprehension, sir. It is just a few point of information, data, and sir, our treasury has performed very well. The profit from the sale of the investment is 663 crore out of 865 crore of profit in this quarter. Now our AFS book is also increased by around 9-10,000 crore even in this quarter also. So Mukherjee Saab, are you going forward? Do this momentum in the treasury performance or income will continue in the coming quarters? As you see that rates also might be little bit of softening may come by the RBI in the rates also.
No, definitely, sir. We are definitely for churning our portfolio in investments, and we have been trying to do that. And that is why, as I told you earlier, that our portfolio yields have increased to 6.91 from 6.69. And also, please note that this change in accounting has given our CET1 a boost of 21 basis point, which is a very big amount, about 1,400 crores. So going forward, our AFS portfolio, we will continue to increase and churn it, as well as use our HTM portfolio as well for churning and getting more and more profits. That is what our intention always and this time also.
That's great. Sir, if you permit, just last question in this round.
Okay, sir.
If you refer the note number 13, sir, we have sold some NPA accounts, 12 NPA accounts of 2,850 crore. That was the book value also and the outstanding also. So aggregate consideration received is 916 crore, whereas in the next same note, in the note number 13E, we are mentioning that the quantum of excess provision reversed in the P&L account from the sale of the state's loan is 371 crores. So the consideration received is 916 crore.
Let me explain to you, sir. Let me explain to you, sir.
Yes,
so whenever you are transferring,
sir.
yes, sir. Whenever you are transferring your account, you are selling your account to NARCL or any other ARC. We have sold to only NARCL, sir. No other ARC we have sold. The NARCL, when you are selling it, the 15% only upfront you will get the cash, sir. The remaining 85% they will give in the form of a SRs guaranteed by central government. Though it is guaranteed by central government, as per the existing regulatory guidelines, we cannot reverse that provisioning on that SR, that portion. So whatever the settled amount, 968, upfront what we got is 15% of that cash we will get it. The remaining accounts made, whatever the SRs they are issuing it, that SRs provisioning against that amount will continue in the system, sir.
All right. So this 371
that provision reversal, you don't see that.
We see only 371 crore.
Yes,
in
sir.
the provision reversal.
Yes, sir.
For this. And what was the percentage of this overall, including 15% and 85% of the book outstanding? I mean,
so
how much
sir,
realization
actually
percentage?
Sir, it varies from account to account, sir. Some accounts we get upfront cash more. Some account upfront cash will come less. But the minimum is upfront cash is 15%. But that varies from account to account.
Thank you, sir. The next question is from the line of Sushil Choksi. Please unmute yourself and go ahead.
Thank you, Sushil ji.
Congratulations for very stable number and stable outlook. Sir,
Thank you very much, sir.
Entire world is searching CASA, and specifically Canara Bank, if we compare with our peer banks at our size level, what are we doing to make sure that our CASA, that's the difference between your balance sheet and their balance sheet where cost to income or other numbers are concerned. Presuming the other two numbers are stable, which are yet to be announced, what are we enabling that our CASA from current 32 goes to 35 or 40% over a period of 3-5 years?
Sir, we are working hard on that CASA. Undoubtedly, we have taken CASA is our first priority among all our business parameters. But historically, when you say that the 62 to 65% of branches network is in the South India, CASA is historically is a challenge for our bank, because that is, though it is yielding in a asset side benefit, but this side is a CASA. We don't want to accept that weakness as it is. And last year, first working day itself, we launched 6 products targeting various sectors. Retired people, we have come out with 2 products. And the salaried class, we have come out with 3-4 products. Then special, other than salaried class for savings bank, we have come out with some select products. And business community also, we have come out with 2 products in the current account. We also simultaneously developed our digital footprint so comfortable with the customers, so that the younger generation with whom we feel that so much CASA is available, and they are the high earning individuals in the present society. So targeting them also, we are launching several features, several products, so that they will start dealing with us. And that has given us a very much good comfortable. If you see our CASA as on December and CASA as on March, CASA as on December, it is only 31.662. Whereas if at the CASA at the March level, it has gone to the 63 basis point more, and we have crossed 32.25 or 26 something. That's the area. This is possible only because our incremental growth in the SB individuals. In the absolute numbers also, I can share approximately around 16 to 17,000 crores in SB individuals alone has been increased. Out of that, only 6,000 crores we got it from through new schemes what we have introduced. So that is actually the major jump what we have got the jump. And simultaneously we introduced a relationship manager concept to reconnect with our high net worth customers. That has been established almost 4,900 branches. Exclusive officer has been given to handle or serve the top 200 customers. And we have introduced API banking with 200 features to make corporates comfortable with dealing from their host-to-host integrity. We also has done corporate mobile app. This is the second public sector bank to make it more comfortable for the corporate so that they can shift their entire ancillary business towards us. And we are taking several initiatives to attract that. Recently, in continuation of that, with the motivation given by the last year, whatever the new products, the enthusiasm has increased in our rank and file, because so this first working day of this current financial year also, we launched 2 new products. One is directly a CASA, that is Canara Angel, targeting for the women. And this is the first of its kind in the India. Whatever the products we are launching last 1 year and these 2 months, first of its kind in the industry, thereafterwards other banks, whether it's a public or private sector banks, are introducing the similar products. And this Canara Angel has got so much attention from the various sections of the people, especially various geographical areas. And in the first 1 month itself, we got 200 crores in the new accounts opened in that particular product. It is not from the existing accounts migrated to that. So new connections, what we got through them, that we got more than 200 crores in that. Simultaneously, we also launched to target the younger generation, whom we want to attract to onboard as a customer. So we introduced a Canara Heal, that is a medical gap funding. So whenever the health insurance scheme has been taken by any youngster for their dependents or for themselves, when they admit their dependents on that, there will be a difference between the TPA settled amount as well as the corporate hospital billed amount. That gap funding, the person can avail it within 2-3 minutes by opting on the online. This is entire thing is being STP process, no physical intervention. Everything, the documents can be uploaded online, and he can opt for that. That product also is attracted many corners from many areas, and nowadays I am seeing more tractions as well as the discussions on that product. This product is aimed not for lending only, it is for aiming for that younger generation to onboard it. So they can onboard, they can open their account online and take this facility then and there, and they can repay it whatever the installments they like it. Such innovation R&D has developed a lot, and you know that very much that in the last January 1st itself we introduced a industry best business analytics and data lake in our special exclusive lab, and that is also as creating wonders in garnering the leads, especially in the CASA side. So these are all the initiatives. We are not stopping here. We are also now having a discussions with many vendors for bringing a Gen AI into our regular customer experience areas, so that also will attract the younger generation. Our innovation in the technology to make more younger generation attractive to this bank will continue, and to attract other sections of the society, our R&D is target oriented, the sector targeted or segment targeted products we are launching it, and these efforts will continue. With that, we are very much confident that the current year we will achieve that 33% CASA. And as you said that it is reaching to 37 to 38%, definitely it's a long way to go. We are working on that, but we are not sure whether we can achieve it in 3 years or 4 years. But we are aiming and we are working on that only. Even recently when we had a board strategy meet, we want to achieve it 35% by 2 years, in the next 2 years. And thereafterwards again we want to keep it in the longer 5-year plan also we are drafted. There we kept it after 5 years, we want to achieve it around 38%. These things are quite possible if we continue with that innovative products. And we are sure we will achieve those things, sir.
So your city attracts the highest and the best talent, and your state attracts the best talent to the service economy and new generation is concerned. The amount of digital spend which we have done to migrate the bank from old Canara Bank to a new generation Canara Bank, when do you think the entire migration will reward the bank? Whether this year, next year, or will it take some more time?
See, innovation and technology imparting is a journey, sir. It is not a destination that we can say that yes, we have achieved 100%. So always you will get innovative things and you have to capture that, and you should be the first in the industry. Then the people will attract you, people will recognize you, people will identify you as their preferred banker. But the majority of the investment, I can say that we have completed, but now we are in that, taking the fruits out of that investment. So now we are working hard on that. But simultaneously, our investment may not be that much. Volumes may invest, but at a little lower side, but investment will continue in the IT. Now current year, we are targeted for Gen AI, artificial intelligence, sir. New Gen AI, what is there, that area, whether we want to improve our customer service, customer experience by introducing in the chatbot or even the customer call center, or even in the online transaction monitoring to address the cyber security, cyber crimes and all those things. Many areas we identified. In that we are working on that.
So in the current year we have already finished 1 month. Based on unavailed limits and what we have sanctioned and your credit guidance of 10-11%, or you may do 12%, what is the limit available with people who, if, let's assume that the economy is on a very high trajectory after election, what kind of limits can be available? What is unavailed limits, undrawn limits lying with the bank?
In the corporate itself, what we sanctioned and partly dispersed, we have approximately 25 to 30,000 crores in that, in the ham sector, in the different areas. And even in MSME also, there are unavailed limits are there 4 to 5,000 crores. All these things, it's not that it will be overnight they will use it. As and when they require, as and when it is due for that, they will use it. But what I want to tell you is, the credit growth, I want to tell you, share it with you, that from March 31st, compared to the last working day of April, after 1 month, so we are total balance sheet pay domestic business, we are 9,000 crores more than March figure. This may be the first bank, we are openly sharing with you, that we are 9,000 crores positive than the March 31st figure. That's what our business plan. and when the activity is less, we want to do more business so that will take care of our NIMs also and returns, yield on advances also, interest income. In the first month itself, we are almost 4,000 crores positive in the advances.
Sir, my last question in this round, if time permits. Besides the 2 IPO which you are proposing, any other asset monetization plan from Canara?
No, sir. At this moment, only those 2 we are thinking of listing, sir. And it is in advanced stage. One is in advanced stage, one is in still halfway. And we expect that one, it may come to the listing in the last quarter of this financial year. The other one may come in the first quarter of the next financial year, sir.
Thank you and best
because our CRAR is, Sushilji, hope you will agree that this is one of the highest CRAR among the public sector, peer public sector banks at 16.28%. And our internal accruals are so high, and that is taking care of our growth rate, whatever it is there. At this moment, we are working on improving the value of our investment. Our focus more on improving our value of the investment.
Sir, I can tell you last
subsidiaries are in that our bank.
Sir, last 24 to 30 months, you outperformed most of the peers in terms of the balance sheet side or many other aspects, and shareholders have been rewarded. And I hope that journey continues with your team.
Sure, sir. We can assure you that whatever the rewarding the shareholders, last time 120%, this time 160%, the same tempo will continue in the current year also, sir.
Thank you and all the best, sir.
Thank you, sir.
Thank you, sir. We have the next question from the line of Anand Dama. Request you to unmute yourself and go ahead.
Hi, thank you for the opportunity. So my first question is on the margins. So this quarter we have seen almost like stable margins as such. Was there any interest on NPA recovery during the current quarter? And what is your guidance in terms of margins for FY25?
So NIM margins means NIM, whatever we are telling, if presuming that current liquidity position continues. So we have seen in the bulk deposits and CDs little softness from a March quarter to now in the April. So that rates were earlier, it was too high. Now it has come down something to extent of 7.6, 7.7, that range. But still retail term deposits, the same rates are continuing, which is high cost deposit only. So at this moment, we don't see too much change in the cost of deposit and the yield on advances in the current quarter. Too much change may not be there. So whatever the performance, what we are showing in the just concluded March may continue in the margins level. But for cautiously, we are projecting ourselves that it may be around 2.95 to 3%. But our endeavor always will be to see that it is our NIM is 3, around 3 or more than 3. But cautiously, we are giving the guidance that because presuming that this liquidity tightness will continue throughout the year. If the flexibility is there, automatically that will impact our NIM and that will show a positive reflection on that.
But
tell me, Anand, sir.
Sir, can you just talk about interest on NPA recovery during the current quarter, like fourth quarter, how much was it?
Interest on NPA
recovery.
So NPA recovery interest specifically is telling that this much target and all, it will be very difficult.
No, for this quarter, for fourth quarter, sir. I just want.
That's what it's a fourth quarter. Overall, whenever we recover towards the transit, if it is a technical return of accounts, in that return of accounts, whatever we are getting it, even book balance is a profit for us. And more than that, whatever we get it, we recover it. And whatever the existing levels, 4 quarters, it is there. So that 200 to 250 crores will continue every quarter. So that may not be a big change. You will see that 1 quarter may you will get 600 crores, 1 quarter may only 10 crores. On an average, generally interest on NPA will come around 200 to around 200 to 250 crores. That will come in that.
Sure. And sir, one thing basically, if you can just talk about what is the overall project financing exposure that we have on our book as of now, in terms of percentage. I just want a ballpark. I mean, 10%, 20%.
See, I already addressed this question twice, but I don't mind repeating that. See,
sir, I mean, you said that basically.
Like that, you tell me that what is the floor limit I have to take, then I'll tell you.
Sir, all we are asking is basically any project financing.
See, you are asking me, you tell me what is your exposure on the project finance. I am asking you what is the floor limit, whether it is a 10 lakhs, whether it is 1 crore.
You take it 1 crore.
See, is it possible to calculate 1 crore above and all those things and readily share with you? Sir, you have a MSME portfolio and all. So let the clarity comes. At this moment, we expect that our exposures are in and around of 1 lakh crore. If you take everything. But let the clarification comes. If the clarification comes that the project cost or the loan amount, the floor limit, if they say 1 crore, it's okay. If they say 10 crore, it is. If they say 50 crores, that different figures will be there. But if you don't take any amount and 100% amounts you have to take, it will be around 1 lakh crore approximately.
Sure. Thanks a lot.
Thank you. The next question is from the line of Ashlesh. Please unmute yourself and go ahead.
Good afternoon. Sir, just a couple of questions. Firstly, on the corporate loan book, are there any further low-yielding corporate loans that you plan to shed? And what is the average yield on the corporate loan book right now?
See, corporate loan book, we don't shed it just like that shedding. So when we generally, whenever there is a due for that, low cost or low yielding corporate book is there. I already sharing with you that we have 60 to 70,000 crores. Whenever those loans comes for either the repayment or for the renewal and all, we are negotiating with that parties. If that negotiations happens as per our expected level, if it is well within our appetite, we love to continue with them. But suppose if they have a better options from other banks and they don't want to increase their rate of interest, in such cases, we are reducing our exposures. It is an ongoing exercise, but it's not that suddenly there will be a negative growth in that, just like the last month what it is there. It will not be there because already it is from March to now we have seen 3,000 crores incremental growth in the corporate book alone in the 1 month.
Understood, sir. So what is the average yield on the corporate loan book for us?
Now it has crossed to 8.05, sir. Earlier it was 7, no? Now it is 8.05. 8.17. 8.17. And we are comfortable anything above 8%.
Understood, sir. And what was this number in the previous quarter? 8.17.
That's what, sir. 1 year back, it was only 7.02 or 7.06. Almost 110 basis points increased in that.
Understood. Sir, and just one last question. What would be the average cost of outstanding term deposits for us?
See, average cost already, it's a cost of deposit, it is reflecting, no, sir. It is a 5.5%. If you want exclusively term deposits, it may work out around 6.25 to 6.5, sir. If you don't add the CASA, only the cost of the term deposits, it work around 6.25 to 6.5%.
Understood, sir. Thank you.
Thank you, sir.
We'll take that as the last question due to time constraints. Thank you, sir, for giving Antique Stock Broking this opportunity. We'll hand it over the call to you for your closing remarks.
Thank you very much, sir. We'll continue to perform as expected lines. Our main thing is consistency. That consistency will continue. We will not see any knee jerks in our balance sheet in the coming quarters too. That much assurance I can give. Thank you, sir.
Thank you, everyone. That concludes the call.